Welcome to this explainer. Today, we're diving into a genuinely fascinating concept, the architecture of passive wealth. We're going to uncover exactly how money moves, grows, and compounds when you aren't even looking. If you've ever wondered how some folks just seem to totally decouple their time from their earnings, well, you're in the right place. We're breaking down the exact blueprint from our source material. Get ready, because we're about to completely change the way you look at a standard 24-hour day. Picture this for a second. It's 2 a.m. in America. Most people are fast asleep, right? The streets are dead quiet. The lights in those massive downtown office buildings are totally switched off. People have packed up, gone home, and the bustling world has basically hit pause to rest. But right under the surface, trillions of dollars are quietly moving around the globe. That's right. While millions of us are off in dreamland, money is still relentlessly changing hands. Online stores are actively making sales to night owls. Stocks are quietly calculating and paying out dividends. Rental properties, they're generating income by the hour. Digital products are being downloaded by people in entirely different time zones. The economy is wide awake and it is actively moving. So it really begs the question, doesn't it? How do you earn money without working every single hour of the day? How do you actually tap into that continuous, around-the-clock financial current? It's kind of the grand puzzle of our modern economy. And to solve it, we really have to shift our entire understanding of how human beings generate value and capture income. Let's jump right into Section 1, the Great Divide, workers versus asset owners. Think about it like this. A worker essentially exchanges their time for money. It's a strict one-to-one trade. And the kicker here is, if they stop working, say they get sick, or just want to take a vacation, the income immediately stops. An asset owner, on the other hand, is playing a totally different game. They spend their time building or buying assets. So for them, the income just keeps flowing long after the actual work is done. It's the core difference between a fragile, time-dependent model and a remarkably resilient, independent income system. This brings us to Section 2, the 4 pillars, assets of wealth. A first pillar is dividend stocks. Basically, when you own shares in profitable companies, those companies might actually share a piece of their profits directly with you. And the absolute beauty of this is that whether you're awake, asleep, traveling the world, or just lounging on the couch, your investment is working in the background. You've essentially hired your money to go out and work for you. Moving on to the second pillar, real estate. Imagine owning a physical property that tenants pay to live in. It's a real, tangible asset. And every single month, that rent check arrives whether you went into an office that day or not. It reliably delivers income completely independent of your daily physical effort. Honestly, it's one of the oldest, most proven ways to decouple your time from your financial returns. Then we have the third pillar, which is digital products. We're talking ebooks, online courses, specialized software, or even design templates. The leverage here is just incredible. You create the item once, right? But you can sell it thousands and thousands of times. The creator does all the heavy lifting up front, but then they unlock this amazing ability to earn from that single effort repeatedly and without any extra inventory costs. And our fourth asset is content. Think of a YouTube video you upload today that pulls in ad revenue for years, or a blog post that attracts new readers every single day. I absolutely love how the source material frames this. Content basically becomes your very own digital employee that literally never sleeps. It just works around the clock, advocating for you, generating attention, and building value while you're off doing other things entirely. Okay, but before we get totally swept away, let's look at Section 3, the reality check, the upfront cost. Here's the slightly uncomfortable truth that a lot of people like to ignore. Passive income is not magic. It is absolutely not some get-rich-quick scheme. I mean, there are no cheat codes or magical shortcuts that are just going to suddenly drop a portfolio of assets into your lap overnight to pay your bills. We really need to absorb this fundamental quote, the money comes later, the effort comes first. The reality is, every single successful asset owner spends months, sometimes years, meticulously building something of value way before any rewards show up. The late nights, the heavy lifting, the initial capital, all of that is front-loaded. You are building this complex machinery of wealth way before it ever spits out a single dollar. Which naturally brings us to Section 4, the ultimate goal, defining true wealth. You see, there's a false dream and then there's the true dream. The false dream is this naive idea that the goal is just to stop working entirely and do absolutely nothing. But the true dream? That's about no longer trading every precious hour of your finite life just to survive. Because when your assets actually start working for you, real freedom begins to grow. The point isn't laziness. It's about achieving total autonomy over your own time so you can do what actually matters to you. And the source material leaves us with this incredibly profound realization. True wealth is not measured by how hard you work. It is measured by how long your money keeps working after you stop. That is exactly why some people wake up richer than they were the night before. Not because they were exceptionally lucky, but because their carefully built assets never went to sleep. Your wealth is defined by the longevity and endurance of your income systems, not just the physical sweat on your brow. So, as we wrap up this explainer, I want to leave you with a pretty vital question to chew on. Are you just working for money, or are you actually building assets that will work for you? Take a really honest look at where you're spending your energy today and ask yourself if it's genuinely building your freedom for tomorrow. Thanks so much for joining me to explore the architecture of passive wealth. Keep learning, keep building, and we'll see you next time.